So problem 3 of financial statements. A few years ago, a company purchased a machine at a cost of $258,000. This equipment has a book value of $182,000 but could actually be sold for $194,000. This is the only fixed asset the machine owns, the firm rather. Net working capital is $41,600 and long-term debt is $95,000. What is the book value of shareholders' equity? So here, we're again solving for a balance sheet value, but we have to remember that the balance sheet is based on the book values and not the market value. Where do we have a market value? Well, when it says it could actually be sold for $194,000, they're talking about the market value for that machine. So again, all we need to do is get the labeling done. Now we have assets equals liabilities plus equity. In the more detail, we have assets are current assets plus fixed assets, and the liabilities are current liabilities plus long-term liabilities, and then we have equity. So let's figure out the numbers we have or we can use. We have the book value of fixed assets. That's the $182,000. We have the value of long-term liabilities, which is long-term debt. So that's just the debt, $95,000. Now we don't have current assets or current liabilities, but we have net working capital of $41.6 thousand for $41,600. So we just need to do a bit of rearranging of the original equation. If we subtract from this equation above here, we take current liabilities subtracted from both sides. You have CA minus CL, like we have down here. And on this side, the CL then disappears, and we have long-term liabilities plus equity. We've seen this one before. So that means rearranging this equity is current assets minus current liabilities, which is net working capital, plus fixed assets minus the long-term liabilities. So we have that here. We have all of these numbers, so we can proceed. So net working capital is 41.6, fixed assets are 182, and long-term liabilities are 95,000. That gives us our answer of equity is 128,600. And that's it. Thank you for your attention, and I hope this helped.